We started the week off with, excuse me, more gains in the stock market. Right now, futures are down for today. It comes ahead of a busy week. We'll be seeing corporate earnings reports come out. As of yesterday, the Dow was up 76 points to close at its highest level in 2023. The NASDAQ was up 131 points. The S&P 500 up 17. We're joined by the man who we always look for financial advice, Randy Waesche. And it's amazing how far we have come from where we were just a year ago.
Well, this is very positively humbling for everybody in our world.
Especially for people who were predicting a recession.
Yes, but we were not.
No, I understand that. You said
but
we're
I did
close.
a report on virtually every analyst coming into this year where they thought the market would be at the end of the year. We're already way beyond anybody's expectations.
And how far are we from where we were before the pandemic?
So if you look, I'll answer this by, if you look at the high of the market, which was January 3rd, 2022, we're only 6% below that.
So we made a very big comeback.
Yes, and quickly.
What do you think is driving this?
Oh, that's the easy one. You've got, if we look at the global picture, coming into 2022, we had government stimulus, we had supply chain disruption, we had running energy prices, and we had labor. All but labor's gone. And so we have a resilient economy. We've got consumers that are continuing to spend. We have still reasonably low interest rates. It's actually a pretty good picture.
I'm sure the Biden administration would love to take credit for this. I mean, they deserve some, but because they were getting slammed when people were so worried about inflation going up, and he was taking the blame for that.
Correct. I think what he should do is take credit for providing the infrastructure for the Federal Reserve actions to move the economy forward. So he should be taking a bow for some of this.
And how big of a deal was the infrastructure bill that added $1 trillion into the economy? It hasn't yet, but
right,
I mean,
that's what I'm about to say. It's impactful, but it's not really.
It's not what's moving.
No, the surprise is the consumer and the consumer's ability to spend. It's really been driving this economy right now.
And most consumers do have a lot of credit card debt. I mean, that's one thing that's very troubling. And the student debt. Student debt is over $1.75 trillion.
And a lot of people can't pay it.
Yeah.
I'm agnostic on that issue because I think if you borrowed money, you ought to pay it back. But there's a whole bunch of people that can't. So I'm not sure. And you can't default on it.
And right now, people are watching their 401ks. I mean, they are going up.
Yep. So let's do a little history.
Okay.
If we look back at 2021, coming into 2022, the government was stimulating money. The Federal Reserve was telling us that inflation was transitory, not systemic. We hit an all-time market high January 2nd, 2022, and it starts going up until the invasion of Ukraine. And then we saw energy spikes.
Yeah.
So from about March of 2022 through January of 2022, we saw a 20% decline in the market, or a qualified bear market. From June of 2022 through December of 2022, what we saw was lots of volatility. But the market closed down 18.11%. We had a sideways market. And then virtually all of this year, it's been on an ascent. So when we talk about the losses that were all in our portfolio, it was really 4 or 5 months.
Yeah.
And we're now recovering from that.
And most people knew it's going to come back. I mean, it was no time to bail. And if you look at the real estate market now, even though interest rates are higher than they were, a lot higher than they were, people are still buying homes.
Yes, because it was so low before. What we're seeing is we're not seeing
But then the prices for houses shot up too.
Yes, but that's what we're seeing a stabilization on. We're not seeing incremental housing prices go up. They can still afford them, but we're not seeing housing prices double in 3 years.
Okay.
Those are the types of things we're seeing differences.
All right,
we're not going to see labor costs go back down either.
Okay, thank you very much. By the way, we like the summer casual look.
You can follow suit.
I could, but I wear the jeans, so that's as far as I'm going to go. All right, let's get over to Peyton.